Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Wednesday, March 6th, 2024. Let's take a look at the chart. Start with the big picture. The weekly bar chart. We'll work our way into the daily chart and the day itself. This is an illustration of a channel structure that still exists, the base of which is 167.34 and the top is 250.28. We've been watching it for months now. It was when we tested it last to the upside in late December. We'd mentioned how the bottom at 167.34 should be considered attainable over the following 3 to 5 months. That happened in about 2 months. On the way down, we had a clarifying sell signal that confirmed 167.34 as a target when we closed below rising two-thirds speed line and channel bottom combination. That was about a month and a half ago. If you recall, if you've been watching the series for the last few months, you know what I'm talking about. Now, in terms of 167.34, we are now sort of flipping it back on its head, saying that as we're testing 167.34, once tested, which we have about a month and a week ago, you could consider 250.28 to be in reach over the following 3 to 5 months. And that is still in play. But in terms of a clarifying buy signal that confirms 250.28 as a clear-cut objective, that would be a settlement this week. Not going to happen above 204.97, or in other words, a descending one-third speed line that takes into account the July high against that more recent low that was about a month and a week ago, 204.97 dropping weekly. We've come very close to testing it. 207.02 is the 1% threshold beyond 204.97. So if we were this week to close above 204.97, I don't see that happening between now and the end of next week either. That needs to be then by a 1% margin. That would then indicate 250.28 to 52.05 within 2 to 3 months or less. But right now, we have essentially tested that speed line. On the daily chart, you can see here at 203.79, we're leaving it at 204.97 as the weekly level. And you can see how close we came. We'd mentioned that while we were testing it, that you can consider 168.07 to be a 3 to 5 week downside objective. So we are well on our way, lickety split. I've reduced 183.52 to a session containment level only, and we also have the inside channel structure at 193.59. That is session containment. I just see with the kind of volatility we have, we're going to call this sort of stair step. But nonetheless, yesterday's settlement below 183.52 has now indicated 168.07. You know, this was once a 1 to 2 week objective if settled below 183.52, but with the expanded volatility, I'm going to call it over the next 3 to 5 days. On the way down today, we do have 177.25. That is a level that we came close to testing on Tuesday. 177.25 is a long-term 5/8 Fibonacci level that we also tested about 5 weeks ago. 177.25, a 5/8 downside pullback from the January low of 23 against the more recent July high of last year. And I have it as just an intraday pivot point or an intraday level that you can certainly trade. Day traders could sell 183.52, anticipating 177.25 as an intraday target where profits can be taken. If we break 177.25, now given the heightened volatility and the sort of vertical downside move, we could actually test 168.07 today. And in fact, I think the scenario would be gapping below 177.25. We've been gapping now. Well, we gapped from Monday's low again on Tuesday. Tuesday's high and Monday's low. There's a gap there. If we happen to gap below 177.57 was Tuesday's low. So if we gap below the 177.25 5/8 Fibonacci, we could actually test 168.07 on an intraday basis, which combined with the daily chart at 167.34 is well equipped to contain daily selling pressures, weekly selling pressures, selling through March and even through the second quarter perhaps. This is a base of support that is significant and above which, as I said earlier, the 250.28 formation in reach over the coming months, clarified with a weekly settlement above 204.97, which is not going to happen this week. Now, if we do close this week, Friday, below 167.34. Once again, it needs to be by a 1% margin. 6-month line studies and beyond, I do think, deserve the 1% violation. If we were to close Friday at 167.10, yes, it's a sell signal, but it's so darn close that it really lacks what I would consider to be reliability. That comes with a settlement Friday at 165.67 or lower, and if we do close Friday at 165.67 or lower, we have a bear, how should I put this? We have a sign of meaningful, longer-term bearish continuation. In short, closing 165.67 or lower at the end of the week does indicate 92.02 as a 2 to 3 month downside objective. This is really part of a range that begins at 101.81, that January 23 low. This area expected within 2 to 3 months of closing below 167.34 by a 1% degree. Until then, it is still bottom-picking territory. Let's go back to this chart here, 183.52. I do think that if we close today below 183.52, we have a good low for the week, 193.59, then likely by Friday's close, where we can also top out on a daily basis. And if we close above 193.59 over the coming days, the 203.79 speed line, 204.97 on the weekly chart becomes a 2 to 3 day target, where once again we can top out through the month of March, and below which we are actually close to reaching our 3 to 5 week target. We'd mentioned how once we approach and test the 204.97 speed line, you should consider a 3 to 5 week swing trade to the downside at 167.34. That is playing out much more aggressively than we had anticipated, but it's happening nonetheless. And at 168.07, if tested over the next few days, and it may well be, it is considered a 3 to 5 day objective below 183.52. If we test 168.07, it is a formation that can absorb selling through the month of March and even through the second quarter, and from here we can round back up into perhaps, once again, the 250s over the following, 3 to 5 months or so. Anything else that I need to break apart here? We have 183.52. That is a sell signal that happened on Tuesday's settlement below this formation, indicating 168.07 over the next 3 to 5 days. If we close above 183.52, I don't see a good reason to be short Tesla if your time horizon is anywhere from 1 to 3 days, because I think that's about how long it would take to reach 193.59. It's very stair-step on the way back up. The only condition in which I'm going to start anticipating 203.79 as a likely objective is either we test 168.07 and then I tell you, you can expect that low 200 area again over the next 3 to 5 weeks, or B, on strength, we close above 193.59. Closing above 183.52, I do not think necessarily indicates 203.79 within a week or two. It really comes down to 193.59. So these levels have been reduced to session containment only. They are solid day trade levels. They have 2 to 3 day, 3 to 5 day pivot point qualities, all of them. But in terms of the 3 to 5 week time frame, we're kind of backing away, giving the market breathing room, selling 203.79, buying 168.07, and vice versa. I think that pretty much summarizes it. I don't see anything else that needs to be said. I think one more thing I could say. I see that I didn't mention 188.28, that if we push or open today above 183.52, 188.28 is likely. And if we close today above 183.52, 193.59 is likely within a day or two, where we can place a daily high. And if settled above, would then signal 203.79 again within several days. I'm going to leave it at that for Wednesday's Tesla report. Please click like, share, subscribe. Check out wickedstocks.com. Take advantage of that 5-day free trial. We put out a stock pick on Tuesday on the dollar store. It is presently testing a long-term price point that has implications into later year. You might want to check it out. You'll be able to see that all for free by signing up for wickedstocks.com. I'll talk to you tomorrow with Thursday's Tesla. Have a great day.